The Indian market continues to do well, starts strong. The Nifty and the Sensex as well as the Midcap index all open at record highs, led by strong global cues following the Federal Reserve's policy decision. Realty and IT stocks lead gains, though off the morning highs, the stocks are a little low.
Nestle climbs after the board approves the continuation of royalty payment at 4.5% to its parent company for 5 years. Brokerage CLSE upgrades the stock to outperform and raises its target price to 2,798 rupees per share.
Sobha zooms nearly 7% after the board approves rights issue to raise up to 2,000 crore rupees.
L&T Finance surges close to around 4% after a large block deal where 3.5% equity changed hands via the block window. Bain Capital and BNP Paribas are likely to have sold stake.
Life insurance stocks, HDFC Life and Max Life surge after the Insurance Regulatory and Development Authority of India introduces revised surrender value norms for life insurance policies.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangala Malu. Well, as we speak, the markets continue to hold well in the green. We've come off a little bit from the top. But good times, Mangala. I think the Nifty bank, that's the one that's not able to, put its weight behind the Nifty. Otherwise, we would have been much higher. As we speak, I think the Nifty bank is on the verge of moving into the red. So let's keep an eye on that one.
It is not sustaining above 50,000. Over the last 8 sessions, 4 times it hit intraday 50,000. If you include today, then it'll be 5 times out of 9. But it's closed above 50,000 just once. So that is one of the problem pockets for the market. The Nifty too struggling to close above that 23,400 mark. So let's see where it goes from here. But the fact that it's not falling too much and the mid-caps are doing well should make portfolio investors feel a lot better as well. Let's welcome Sachidanand Uttekar of Trade Bulls for a quick check on the market. Sachi, we have seen some supply at higher levels after a big rally that we've seen already. It is weekly options expiry today. Where do you think the indices go from here?
Good morning, Nigel, and good morning, Mangalam. I think clearly, if you look at today's data, the opening is evident that Nifty is facing some resistance at 23,500 kind of a mark. And on the lower side, there's a good evidence that we may not close this particular session below the 23,350 mark. So I think we may see the Nifty, resting within this particular band. Clearly, Nifty Bank is under pressure, and even there, I think there's a good chance that we may see the oscillation somewhere close to around 49,800 to 50,000 kind of a zone itself. So I think both the indices may remain range bound, and Nifty may unfold its next rally once it starts confidently, trending above that 23,500 cluster resistance. So I think for the day, it looks like this particular resistance may hold for the day, and we may see Nifty expiring within this particular range of 23,300 to 20,450.
Okay, all right. Hi, Sachi. Good to see you in. What about individual stocks? What are you tracking?
Nigel, clearly the focus is on IT stocks, and even here right now, what we have recommended to our clients is building long positions in Coforge. The stock has already displayed some signs of reversals. Even on the 60-minute chart, we have a kind of a bullish flag formation exhibiting a target somewhere close to around 54.60. So we are recommending our clients to build fresh long positions here. One can keep a trailing stop loss somewhere close to around 52.40 on the lower side, and the mark of 5,300 has just been breached. So we may see a good strong momentum rally right towards 54.60. The other stock which has been on my radar is Lalpath Labs. Even here, if you look at the last 4 trading sessions, we did see some unwinding pressure here, but the kind of data which has been exhibiting here, it is trending well above its 5-day exponential moving average. We are expecting that there could be a turnaround in this particular counter, and we may see a rally towards 29.60 eventually on a positional basis, and that's why we are recommending building long positions here, keeping a stop loss somewhere close to around 28.10.
Right. Just apologies, if we could repeat the first stock that you said?
It's Coforge Limited. We
Coforge, okay, got it.
Expecting to move towards 54.60.
All right, take that point. Thank you, Sachi, for joining in, giving us your views on stocks as well as the entire market setup right now. Though what we're seeing is a pickup in all these IT names. Some of the mid-cap IT stocks doing extremely well. We saw a big move in Oracle yesterday. That continues today as well. That's moved to the high point of trade. And alongside that, we are seeing some traction come by in other mid-cap IT names as well. Coforge, one of them, as Sachi pointed out, was at the high point of trade too. Take a short break, come back, get you more on, the housing finance space and the affordable housing space itself. We have Varun Gupta, who's the director at Ashiana Housing, to discuss the government's PM Awas Yojana scheme and much more. Stay tuned. Well, frontline indices doing what they are, with the mid-caps doing a lot better. Let's talk about the affordable housing space now. And this, as the new cabinet expanded the Pradhan Mantri Awas Yojana, PMAY as we know it, to build 3 crore additional houses at a cost of about 4 lakh crore rupees. And also, the affordable housing finance scheme, or to increase finances towards affordable housing, both rural and urban, is something that there is a fair amount of thrust on. So to discuss this in further detail, we are joined by Varun Gupta, who's the director at affordable housing builder Ashiana Housing. Thanks a lot, Varun, for joining in. The first question obviously is, what proportion of sales come in from affordable housing for you? How is it that you define affordable housing versus what the definition under PMAY is? And what proportion did you get from PMAY 1, as it were?
Nigel, I'm sorry. I thought we were discussing our financial year results when I came in, and I would.
We will speak about that as well.
I'll just specify. We are not really a affordable housing developer.
Right.
We do mid-market homes within, let's say, a 40 lakh to a 2.5 crore bracket, with an average about unit size of about 1 crore now. And we have lots of units in the 40, 50, 60 lakh bracket. Most of it actually does not qualify for PMAY in the earlier definition. Part of it did. I'm hoping that they will increase the income slabs and the home loan quantum that they were allowing for this, given inflation over the last 5, 6 years, 7 years since the last scheme was announced. We had lots of units qualifying for those for PMAY 6, 7 years ago. But I think with inflation and general increase in pricing across markets and sizing also across markets, this is something we don't qualify for.
Okay, all right. Hi, Varun. Good morning and welcome to the show. This is Nigel on this side. Let's focus on business then. For the past fiscal, you've done roughly around 1,800 crores. And I think in volume terms, it's around 26 lakh square feet. For FY25, how's it looking? Things have looked up. You've shown some good growth. Should we brace for a number of around 2,500 crores for this year? And what could it be in terms of volumes?
So, hi, Nigel. I would say we should cross 2,000 crores this year, and there should be roughly the similar kind of volume growth. I don't over this period. So we would expect if we cross 2,000 crores, it will be a good year. We ramped up significantly over the last 3 years. We have more than tripled in sales volume, and now continuing as long as we continue to get double-digit growth, I think we'll be more than happy.
So if you are looking at double-digit growth with the same volumes, you're expecting realizations to increase by about 10%. Is that correct?
Yeah. So no, through a mix of it. So I would put it this way: I don't know whether we will have realization improvements or volume improvements. We have targeted sales volume of value of more than 2,000 crores. It will be driven by a mix of volume and pricing, depending on what projects do better and which markets do better. So I think, but we are more than confident to get 2,000 crores plus this year.
Okay, we asked that because we saw a little more than 30% increase in your realizations last year from FY23 to FY24. And
Yeah.
Over the last 4 years, if I look at it, it's more than doubled a little. So just wanted to know what is the quantum at which prices can increase after a dramatic increase that we've seen already?
So a large part of the dramatic increase also for us, Nigel, has been change in mix of our markets and mix of our projects, where Gurgaon has started kicking in substantially more revenues than it was earlier, which is seen as a market price growth, and also it is priced in base prices also more than our general other markets. And also senior living has become a larger category for us, and senior living also we price higher. And that thing is probably played out significantly. Now increases in our pricing will be driven more by general increase in prices across the board. So therefore, muted price growth as compared to earlier price growths, but we will continue to see increasing prices because the real estate markets across are supply constrained, and till they remain supply constrained, I would expect prices to increase.
Okay, all right, Varun. So that was Mangalam. This is Nigel back again. Since you briefly mentioned senior living, the segment, how much does it contribute in terms of volumes or value? If you could help us out with that.
So it's contributing between 15 to 20% of the company right now in value terms, and we expect this to increase to a third to 40% over the next few years, as about 40% of our stock now is senior living. We are over investing in this segment because we expect this segment to do better, improving demand, improving margins, increased value for the customers by giving a much more differentiated product that services their needs. So all of that put together, I think senior living will get a larger focus from us.
Okay, you talked about 15% ROE as a target. This year you hit that number?
So we track ROEs on a two basis, on a reported basis. The reported basis, we have not hit the target of 15% ROE. But on an economic basis where we track, because reported profits come in as per deliveries, on an economic basis, we have more than crossed the threshold of 15% ROE. And I think we seem to be on good trajectory to also improve reported ROEs going forward.
Right. What about, land acquisition? I remember you were looking for some land in Mumbai. I just wanted to know whether you've earmarked some amount for that. If yes, how much? And also the land in Kolkata and Milakpur, both were under sort of court orders. What's the update there?
So from Kolkata, we have exited and we are from the transaction, and there we are looking just to get our money back from the counterparties there. And in Milakpur, the land remains under legal disputes, and we are looking to resolve that as we go ahead. But I don't have any sort of light to give on that when it can happen. At the same time, we have earmarked amounts for different parcels in different places, but it's flexible depending on where we get transactions. We are actively looking at the Mumbai external areas of Mumbai for senior living. We have been happy with the launch of Ashana Amod in Talegaon, which is servicing both Mumbai and Pune, and looking for one more project in that corridor. And we continue to look for more senior living projects across the country in the future.
And the proposal to co-invest with IFC, What are the identified projects here, and what projects of yours are currently with them?
So we have we did three projects with IFC. One is Ashana Daksh in Jaipur, which is more or less completed, and we have returned with returns most of the capital back there. And we have Ashana Amara in Gurgaon and Ashana Vatsalya in Chennai, where Ashana IFC has co-invested with us. And the second platform, we have working on a few projects. Nothing has been identified yet because we typically look to deploy in new projects with them. So as in when we pick up a project, they will invest in themselves. We have term sheets and we are in advanced negotiations in projects, but nothing concrete as yet.
All right. Thank you, Varun, for joining in, giving us an outlook on the year ahead as it looks like to you right now. Over 2,000 crores on the top line, led by a mix of both realization and volume growth, with an increased focus of revenue coming in from senior living. We'll await some more details on the expansion that you're planning in all parts of the business that you operate in. Thank you for joining in. The stock up around 1.5% as we speak, has seen a decent traction over the last couple of months or so. Take a short break, come back, get you more on all right. Before we take that short break, let's get you a special segment where we get you ideas for profit coming in from our colleagues at Money Control Pro. As always, Khushbu Rai Gupta today joins in.
Today's idea for profit is Home First Finance Company. Home First is a technology-driven housing finance company that operates in the affordable segment targeting first-time home buyers. If we look at the earnings, Home First has been a consistent performer despite intense competition in the sector. The company started the year on a strong note as the asset under management crossed rupees 10,000 crore mark, backed by buoyant demand from Tier 2 and 3 cities and strong policy thrust. Now coming to the recent developments related to the housing boost by the government. In the first cabinet meeting, the newly elected government maintained its earlier stance that affordable housing sector will be a key focus area, and it was decided in the meeting that 3 crore more houses will be built under Pradhan Mantri Awas Yojana. We believe that Home First will stand to benefit given the robust loan growth and stable asset quality. If we look at the recent performance, the stock has rallied by more than 10% after the news and is currently trading at 2.7 times FY26 book value. Investors should consider buying the stock on big corrections with a long-term view.
Thanks a lot for that, Khushbu. Well, time to slip into a short break. We'll get you more on markets and on stock-specific action on the other side. Stay with us. Welcome back. Well, a few stocks actually are coming off the high point of the day. Intellect Design, well, that stock has slipped a little bit. It was up closer on 5%, so that's come off a little bit. But on the flip side, you have stocks like Piramal Enterprises as well as Siemens Mangalam that have moved higher. So I think we should get both those two up. But Yash is waiting for us. So let's go.
Yash is indeed waiting for us. This has to do with the surrender value. I mean, he's been talking about that for a while now. Seems like the final word on that has come in from the insurance regulators. And Yash is joining in with the details. Yash.
Well, Mangalam, as you rightly pointed out, the final word as far as surrender value regulations are concerned, and let me tell you, life insurance companies, particularly two life insurance companies, HDFC Life and Max Life Insurance, are definitely not going to like these elevated surrender values. Why did I say particularly these two companies? Because both of them have high exposure to the non-participating product portfolio, which is highly vulnerable to surrenders. Now, what the regulator has said is that surrender value, which is the special surrender value, needs to be increased. Remember, just last month, IRDAI had sent a proposal to various life insurance companies, talking about how it expects special surrender value to go up, what should be the mechanism, what should be the formula. And after that, life insurance companies had said that this would take special surrender value and hence the total surrender value to really elevated levels. They had, sought various exemptions from the regulator to balance it out in their interest as well. Well, I would say most of those exemptions sought have not been accepted, except for one small thing, which was that life insurance companies had asked, for a 100 basis point spread when it comes to the usage of GSEC yield, which is 7% for the calculation of special surrender value. What has been given in turn is not 100 basis points, but just 50 basis points. Now, if you put that, formula of 7% as GSEC yield plus 50 basis points, the surrender value that you get, by putting all the values of a life insurance policy is about 7,823 rupees on a 10,000 rupees premium paid, which is 78%. which is what the elevated levels that we are talking about. Remember, the first proposal had come in December 2023, where the regulator had spoken about taking the surrender value to 83% of the premium received. Of course, there was a lot of resistance, after which the regulator reduced the guaranteed surrender value to just 30%. Insurance companies were happy. They were very relieved with that. But then after that, the regulator started talking about increasing the special surrender value. The proposal which went through suggested 83% of the premium received. After that, again, resistance came through, and finally we are here today with the final regulations, which talks about 78% of the premium received will have to be repaid to policyholders in terms of special surrender value. Insurance companies are talking about 100-200 basis points impact on their VNB margins, simply because the expenses will increase. But you never know that there could be a few long-term implications also. We'll have to wait and watch out for those, if it impacts their persistency, asset liability. So all those will unfold in longer term, but for now, the immediate impact on margins of about 100-200 basis points.
Thanks, Yash, for that. Well, let's move on then. The IT sector is one of the top gaining sectors today and is in focus on the back of a number of triggers. Hormo's always on top of it. He joins us to fill us in with those reasons and why the stocks are moving. Hormo's, take it away.
Well, multiple triggers, as you just mentioned, for IT stocks, and we know what happened with the Fed last night, so that is one of the key triggers as well, opening the door for more rate cuts in 2025. Now, also the Nasdaq, in response to that, hitting a record high overnight, and also Oracle Corp, after its earnings, the very strong reaction in the stock there as well. The IT as a sector has also been in focus because of the recent deal wins that the companies had. Wipro just won a $500 million deal. HCL Tech yesterday signed a $278 million deal as well. But Nasdaq hitting a record high has not necessarily reflected or rubbed off on the Indian IT sector, because the Nifty IT as of yesterday's close was still down 3% for the year compared to Nasdaq's, which is almost 18% up so far in 2024. And the management commentary also has not shown any improvement compared to what we had seen earlier. There were some companies at the Morgan Stanley India Investment Forum and TCS said that there is no change in the demand outlook, but margins may have a positive bias in FY25. LTIMindtree said that there is positive momentum in the near term, but their margin aspiration that they have of 17 to 18% may get delayed further. And while Infosys was possibly the only one that has some positive commentary coming in, that while there is still status quo on discretionary demand, but the deal pipeline is strong. The deals that they have won in the recent quarters is getting converted to revenue, and they are confident of their Project Maximus also contributing to margins in FY25. So in response to that, Morgan Stanley is overweight on both TCS and Infosys, while it is equal weight on LTIMindtree. But all in all, positive news for the IT sector when it comes to the global cues as of now. We'll see how this moves forward as well.
All right, take that point. Horma's a decent move is what we're seeing on the IT space. But Citi's chief global economist, Nathan Sheets, has said that inflation data in the US is improving, but 1 month's data may not change the Fed's forecast much. On India, he does believe that policy continuity will be a positive. So let's hear him out.
Previously, the soft CPI number was very important. And if we get a couple more months of inflation, like we saw this morning, the Fed's going to be cutting rates. And my sense is that very well may happen as soon as September. I think the broad view is that some of the hotter inflation we had earlier in the year is breaking. And given that, I think that the expectation, as I mentioned, is that the Fed is going to be data-driven, and that's going to open the door for more rate cuts. We are seeing some improvement in inflation that was not fully factored into those projections. Broadly speaking, global investors are aware of and comfortable with the investment regime and know how to invest in India. We've certainly seen that over the last several years. And then, as you point out, I think the question is, on the margins, are policies going to be changing in some way because it's a coalition government that might have an effect on either the ability to invest or the attractiveness of investment in India? And I think those are the open questions. But for now, based on where the equity market is, I think investors are giving Modi the benefit of the doubt.
All right, so that's about the markets in India. Just keep an eye out on a couple of cash market stocks. One of them is Kaya. It was locked in 20% upper circuit yesterday. continues to do well today, and with the same amount of volume uptick, that stock is up another 20% in the first hour of trade itself. So we'll watch out for all of this, but the rest of the market at the top of your screen. From Nigel and me, thank you for watching.